ETF. Always good to do Bitcoin on the weekends. And so I'll talk about the advantages and disadvantages of using this ETF, and we'll take a look at the Bitcoin charts and Coinbase. Some interesting stuff going on with that. So yeah, this is Brian Lewis with MMT Investing, coming to you from Peru with my alpaca hat on. I'm in Lima, and yeah, please smash the like button if you like. And share, chat, sub, bell. Let's go. So BITO, this ETF was created pretty close to the Bitcoin peak, so it looks horrible. But this is what we've been doing. I mean, it's just bear flag after bear flag. Flag, 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 flag. And is this a bull channel or is this another bear flag? I don't know, but we're going to take a look at some indicators and check that out. But I wanted to talk about the BITO, what's awesome about it and what's annoying about it. Well, one thing is it does not trade on the weekends because it's an ETF. So it's normal market hours. It's not 24/7 like most of Bitcoin trading. And also, I mean, you're not actually holding Bitcoin in a wallet. So, not financial advice as always, but I would never buy shares of this or hold this. But what it's awesome for is it has a really good options chain, and it's an ETF. You can trade on E-Trade or Fidelity or whatever, and you can trade it inside of a retirement account. So like you can roll over a 401k to an IRA account and turn options on. You can trade it inside of like that type of account, or you can create a Roth IRA and trade inside of there. And Roth, you pay taxes before you put the money in, and then if you take your account to $1 million, you never have to pay taxes on it. So Roth IRAs are really cool, and you can trade options on Bitcoins inside of a Roth IRA. You know, make whatever 10 million bucks and tax free when you're taking it out. So that's really cool. Um, yeah, but yeah, I mean the downside is obviously it's an ETF, so it's basically a side bet. And if you're doing options on top of an ETF, it's like a side bet on top of a side bet. You're definitely not holding Bitcoin. But yeah, let's take a look at the Bitcoin chart because that is actually moving right now. And I've got some cool lines here. There's our bubble top area. So right now I'm shorting Coinbase, and I'll explain why I'm shorting in a minute. But this BITO I want to use on my next long position, and so on the bullish side, if we go bullish now, I'll close those shorts. And the topping, you know, we want to pick up this long-term support and then make our way up here. And this is around 85. And we have broken out of the top of the bubble trend the last couple of times. And so I would say, you know, if we break out of the top, 85 to 100 kind of area is the upside target if we do that kind of a bullish breakout. But right now, I'm not expecting that to happen because we're starting the interest rate down cycle, which is where recessions happen and crashes happen. And I know some people are saying that Bitcoin is decoupled from the general market and from the banking system. Like people are taking their money out of banks and going into Bitcoin. I don't think that's true at all. Bitcoin has traded with the market forever, and the only two crashes it's seen is the 2018 crash and the COVID crash, like in its entire lifetime. And it crashed super hard with those crashes. So I don't think it's decoupling. And we have lots of cool trend lines. I mean, we've broken Bitcoin the last couple times has broken out of these wedges and had a huge bull run when it broke out of the wedges. But the financial conditions were totally different. That was breaking out into a huge monetary expansion both of those times. This time it's breaking out into a big contraction. And I know the Fed balance sheet has gone up, trying to bail banks out and backstop the FDIC. But this is not expanding the money supply. The money supply has been contracting and it continues to, it's accelerating. Like less and less loans are available. There's no stimulus checks. There's not new money coming in right now. But in any case, on the bearish side, I have this, I have this sort of diamond top idea, diamond reversal, and also these bear channels that are parallel with our main channel here. And so the diamond reversal is just the height of the diamond kind of to the downside. Is this type of a move if it breaks out of a diamond top. So yeah, like I was saying, I'm not shorting Bitcoin, but I'm shorting Coinbase. But that's sort of the bearish look, is to kind of come down somewhere in this area around 13 maybe in a couple months. It's kind of the idea on the downside just for Bitcoin itself. But if you go over to Coinbase, Coinbase is, well, Coinbase IPO'd also during during the top of the Bitcoin bubble. So this chart also looks horrible. But you can see here, we popped off the downtrend. And so I'm playing for us to return to the downtrend here. And that's a pretty big down move, 60 to 20. And it has a whole bunch of reasons that I'm shorting it. I mean, Bitcoin, I think, is going to make a bearish move. The general market, I think, is going to reverse and make a bearish move. But also Coinbase has regulators coming in, and the banking collapses. These are banks that convert dollars to Bitcoin, and the US banking system is cutting out the ability for these banks. As they're getting bought out, there's stipulations that they cannot do Bitcoin transactions. As the banks are collapsing and getting bought out, they're stopping U.S. banks from being able to do the Bitcoin to dollar conversions. And so Coinbase is trying to go to Singapore and work with them. But in any case, this is all not awesome for Coinbase. Regulators, like cutting the banks out, the general market, and I'll go look at the super magical chart here, which is the euro-dollar futures. And I do 1 minus the euro-dollar futures to flip it upside down so it matches like the Fed funds rate. So this is interest rates and inflation. It's all the bankers and bond traders basically betting on inflation and interest rates. And this is the interest rate up cycle, which is usually neutral, and you usually get a little bullish at the top. And the down cycle every time is where the crashes happen. Crash, crash. And this peak reversal and this volatility is making me think we are moving into a down move immediately, like soon. Although it doesn't have to be that soon. It could go bullish and sideways for a little while before it comes down. But I do expect us to come down to here at the very least, and probably, I don't know, down to maybe all the way to zero again. But 1 or 2% interest rates is not would be a pretty like soft landing, but it's possible to go farther. But in any case, it looks like we're about to start making down moves, and that would mean the Fed is cutting rates. And people are saying like, oh, if the Fed cuts rates, that's going to be good. That's going to be good for the stock market or good for Bitcoin, because it's like new liquidity coming in if they're cutting. But that's not how it works at all. The down moves are when there's huge monetary contractions, and that's a big crash. And then after that crash, the Fed will come in and like try to do monetary operations. But it just like stalls you after you've crashed, and then you usually get like a side move, kind of like this. I mean, we got like vertical gaps on the way up. It won't be surprising at all if we do the opposite thing on the way down. And these down moves are going to be big crashes when they happen. So that's just kind of the outlook on the market. I mean, we're rolling over into the interest rate down cycle, and that is recession every time. There's crashes every time. This down moves COVID. This down moves 2018 crash. We had the big bull run after the financial crisis, but this is the financial crisis. This is the Lehman Brothers crash. Oops, the first half of the financial crisis here, second half of the financial crisis here. The down moves are the giant crashes, and this is all recession territory. If you go back a little bit farther, you'll see .com. This whole down move here is the .com. .com bust, down move, recession. That's how it works every single time. and that's where we are right now. We're on the edge of this thing, reversing. So don't know exactly when it'll come down, but it's gonna come down. And it's just obvious from the volatility, and banks are failing. Like, the hiking cycle is done. We're on the way down now. So that's the outlook on the general market, and I think how the interest rate cycle and the general market relates to Bitcoin. And BITO, a really cool way to trade options, especially inside of a retirement account like a Roth or something. But yeah, in any case, I'm shorting Coinbase now, and the next long, whenever that is, I don't know when that will be, but the next time I want to go long with Bitcoin options, like versus like Ledger X or something, if you go to Ledger X, well, you can't do it inside of a retirement account. And also the spreads on the option chains are not really awesome. The option chain inside like the BITO, the BITO ETF is it's a pretty good option chain. It's just normal kind of trading that you can do on E-Trade or Fidelity or whatever. But yeah, anyway, happy trading. And good luck on Bitcoin. I know people are getting bullish on the NASDAQ, bullish on Bitcoin, but I want to show, let's see, the NASDAQ versus the S&P. This is a pretty good indicator of where we are also. In terms of the NASDAQ breaking out, like we've had a big bullish run, but this is NAS versus S&P, and we've had whatever this is, like 20 years of bullishness of the NASDAQ outperforming the S&P pretty much since like the dot-com bust. And right now, this is the first time in whatever 15 or 20 years where we've broken down. We broke down and back tested this bubble trend, and now we're going up and doing a second back test. And if the NASDAQ comes down, it's going to be, I mean, basically leading the down move into this credit down cycle. And so in terms of like risk on, risk off, like that is a big risk off move. That should be really bad for the NASDAQ. And the big bubble stock I covered in my last video, NVIDIA, also running into its resistance here, making an exhaustion move. But yeah, if the NASDAQ dominance reverses and we start a down cycle and this thing is exhausted and running into resistance, like it's pretty much the bubble at the moment, NVIDIA, the big AI bubble. Anyway, that's where I think we are, and I think it's starting like Tuesday is my best guess on when it's actually going to start coming down. I don't think it's going to be 3 months away. I think it's 2 days away. But in any case, that's what I'm looking at, and I'm totally, if this thing doesn't start doing what I'm thinking it's about to do by the end of next week, I'll totally reevaluate everything. But that's what I'm looking at right now. And so, yeah, hope that's helpful, and happy trading.